Hello, I'm Nigel Reynolds, Reynolds and Co, Chartered Certified Accountants. We deal with owner-managed businesses and property investors. What I'd like to talk to you about today is one of the other changes coming through in making tax digital. That's in connection with a change to the accounting periods. Now, this won't affect landlords at all because landlords already have to produce their information on a tax year basis, i.e. falling between 6th of April one year and 5th of April the next. A lot of other businesses, or sole traders rather, won't be affected by this. And the reason being that they're fairly modern businesses and they will have chosen to produce their accounts on a tax year basis already. It will, however, be a major problem for a lot of partnerships, the older partnerships and older sole traders who have picked a different accounting date. Now, historically, you've been able to pick any date between the 6th of April and the following 5th of April in which to end your accounts. And a lot of people will have picked a natural 12-month break. Now, under the old rules, what that would have meant is that you get an element which, because of our tax system, would have been taxed twice. In the transition year, 2023-24, what will happen? Say, for example, traditionally you've produced your accounts to 30th of April each year. What will happen in 2023-24 is that you'll actually produce your accounts from 1st of May 2022 through to 5th of April 2024. Now that's going to give you a 23-month accounting period. What will then happen is that the previous overlap relief will be deducted from those profits so that you don't get taxed on income twice. But what it will probably mean is that because most businesses when they start up have fairly low profits, you're going to be in a position of having a fairly big tax bill. That is going to be painful for a lot of these businesses. Unfortunately, under HMRC's rules, that really isn't going to have any impact. They're not concerned. What they're concerned about is moving over to this tax year basis. The other thing you should be aware of is that HMRC have agreed that if your year end is 31st of March each year, that is the same as the 5th of April. So if rather than producing it on a true tax year basis, 6th of April to 5th of April, you go 1st of April to 31st of March, that will be fine. That isn't going to be an issue. So this is going to be a fairly major change, and for that reason it's worth looking at it as soon as possible to get in front of it and to know, do you need to raise some finance in order to be able to pay your tax bill? How are you going to manage it? Do you need to approach HMRC to agree time to pay? If this is something that you need help with, then by all means contact me, Nigel Reynolds at Reynolds and Co, Chartered Certified Accountants. Our contact details will be at the end. Thank you. Thank you for watching, and please do get in touch. In the meantime, subscribe to our channel to watch our other videos on making tax digital.